Okay, so we're earning over 1 million in dividends per year and our account's over 2 million. But what can threaten this? Well, a reverse split, or for that matter, no reverse split, that could affect our available withdrawal and could hamper our ability to live free from a 9 to 5, the FIRE lifestyle, which we promote here at this channel, financially independent, retire early. We're doing this with our dividends and with some Yieldmax. But again, if we don't get a reverse split in some of these funds, there are going to be huge implications for our portfolios. And I'm going to share with you what those implications are. And I'm going to also share with you how I'm getting around this if they choose not to reverse split. So again, we're earning over 1 million per year in dividends using Yieldmax, Margin, Cornerstone, and other indexed funds. We're outperforming the market as well. Everyone's wondering, how am I doing during this recent crash, this recent correction actually? Well, we're up 29%, okay, 30% if you're rounding. The S&P is up 13%, the Nasdaq's up 17%, the Dow's up 8%, the Russell's up 10%. So we're up 30%. We're doing times 3 what the indexes are doing because we use margin responsibly, even in a down market like we've seen over the past week. This is nothing though compared to what we've seen in past years. And we're ready for whatever comes next week. But what if we also get a reverse split? Okay, or again, for that matter, no reverse split. Okay, what's going to happen to our account if we get no reverse split? So our dividends here, are going to pay back this margin. This margin is 700,000 now, but I'll share with you what that margin debt really is. Okay, it's nothing to be alarmed of. If you need help doing what we're doing, living financially free from 9 to 5, outperforming the markets in the process, email me for my e-guides at akintodd48@gmail.com or head to my website, unconventionalwealthideas.com, where we're leading the FIRE movement. Okay, you can find out all about my e-guides here, all of my bundles. All right, so how are we dealing with a reverse split? Well, how are we dealing with the market in general? Okay, it's great to see my chat here, my wonderful community, and we've been going through this volatility in the market over the past week. I've made a lot of videos for members, and here I want to just discuss how I'm getting through the market, especially with no reverse split. Okay, that was the news when I went on Spaces with Wolf Research. And we're talking with Yieldmax, and they're saying there that they're doing more weekly pay. That was their announcement. But they also announced that they're doing no reverse split for ULTY. And then I had to leave the show. I apologize, Wolf and Ryan and whoever was there, who invited me. I had to leave immediately and go tell my viewers. And I made a video about this last week or so. And now I want to give you the updates, okay? So, if you're in a cash account, this really isn't going to matter for you, but most traders like me and, all of my members, all of you out here on YouTube, most of y'all, have a day trading account or like to do things with your account, options, et cetera, et cetera. So if you have no reverse split and the stock falls to below 3, if it falls below 5, then you get, a maintenance increased if you're over concentrated, E-Trade said. That's according to E-Trade. But if you're below 3 a share, then the maintenance goes to 100%. And please confirm with me, chat, if I'm wrong. I know Charles Schwab, people say that they've seen that at Charles Schwab. So if we go to $3 a share in ULTY, then again, we're going to see our maintenance potentially rise to 100%, which would threaten a lot of people, okay? Not just people using margin. Again, it's anyone who's just utilizing a pattern day trading account, okay? If you want to buy and sell and then buy again before settlement of those funds, and not get hit with a house call and lock up your funds for 90 days, then you have to be a pattern day trader. When you're a pattern day trader, you're utilizing maintenance, okay? Not only so that you use margin, you don't have to use margin. You can just be selling options in your account. You can just be living out of your account like I do. Okay, my available withdrawal is 460. Okay, so our net account value is 2 million, but our available withdrawal is 460,000, which means that I can withstand over 20% corrections in the market and still be free from a margin call. Plus, we have all of our strategies to avoid margin calls in the event of a downturn, which we've been utilizing many of in volume 7 this past week. And next week, we'll be ready for whatever happens in the market. By the way, even if we go higher, we're positioned to go higher. We've been outperforming already. We're already up 30% for the year. If we go lower, well, then we have our plans in place, okay, to de-lever, which we talk all about in volume 7. And so we're just putting that philosophy to work in volume 7. when I've had all this margin, you see that I have 700,000 in margin, you would actually say, well, we haven't delevered at all. Well, this is different. Again, I'll share with you what number is going into my margin debt there. So we're not worried if the market falls because we have our plan to delever. Again, we talk all about that, but we also have our put options on, we have our hedges in, okay? And, so I'm not worried if the market goes lower. We've also done a lot of profit taking and managed our position sizes. However, if we go lower with ULTY falling to, approaching 3 a share, it's around 5, falls to 3, and then they had this announcement of weekly payouts, which doesn't change anything. We knew that all along at my channel. What we were concerned about is if you have an ex-dividend date, albeit a smaller dividend that week, you have an ex-dividend date drop that week, plus a down market, which we were fearing and we got out of. And then I was telling them how I was worried about this market correction, how we could bring prices down so much, bring it from 5 to 4, ULTY, all the way down to 3 if we have a true crash or whatever in a short amount of time. But if you have the ex-dividend dates, increase to where you don't have more dividends, it's the same dividend, but you just have more frequency of them with a down market, that's going to bring you obviously closer to that $3 number, in a hurry. Okay. That's all that we're saying. So we're not worried about the weekly pay news. We're worried about the fact that if we get to 3 with any ex-dividend dates along the way, and we're not even going to talk about ex-dividend dates anymore because, again, I'd rather wait a month, in some cases to have the market reverse back and then have the ex-dividend date drop. But anyway, it doesn't matter. I prefer, weekly payouts because that pays down our margin debt faster, but it does bring you closer to that $3 level if the market's falling at the same time, right? Okay, correct me if I'm wrong, chat, okay? And I really hope Yieldmax is listening to this one because I have questions, okay? I heard that they said that they're, not going to reverse split. So how are they going to deal with the maintenance rising to 100% in many of their funds, not just ULTY? I mean, one of my favorite funds is Crash, and, that fund, because we use that to hedge things, that fund is at 302. Okay, so when it gets to typically below 3, that's when you see 100% maintenance. Now here it's saying 150 a share for Crash, so we'll see what happens with that. But when these share prices reach 3, typically, okay, you go to 100% maintenance, which is going to make our available withdrawal drop. Okay, so we can withstand over a 20% correction for now, but what if we were to have a maintenance change? I mean, for me, I'm okay because I don't put enough into ULTY to matter, but I know a lot of my members are over leveraged in things like ULTY, and the maintenance is all important for things like ULTY, especially when you're over concentrated. If you need help understanding maintenance, that's in my volume 3 e-guide. Okay, we're not talking about expense ratios. We're not talking about charges or fees. We're talking about maintenance here, okay? It's the whole secret to living free out of your brokerage account. So if ULTY goes to 3, which it's going to be, a long time before it gets to 3, assuming there's no market crash coming in the distant future, well, then we're going to be okay for now. But what about all other Yieldmax funds too that are approaching that $3 area, which again, every broker is different. Here at E-Trade, it's showing 150 for Crash. So let's hope that's true. All right. We're going to watch it on Monday. And if it goes below 3, we're going to see what happens to our maintenance. But I just want Yieldmax to be aware of the fact that you don't have to be using margin. You could just be having a brokerage account like this, like we have. And if you have names that keep dropping from the ex-dividend dates, which isn't real erosion because we factor back in dividends and we love that. We also love the weekly pay structure. Once again, pays down our margin even faster. But it's going to slowly, get to that $3 area, raise your maintenance, which then takes your available withdrawal down. Some people could get a premature margin call, or if you're just like me and you're trying to live out of your account and pay your bills, all my bills are automated out of my account. Well, then this available withdrawal is going to be so small that I can't really withdraw out of my account. And if the market keeps falling, well, then I'll be at a negative. Okay, I will be at 0, and then my margin would obviously, I'd be in a margin call by $1 at that point. But luckily, I, again, don't have a lot of money in ULTY, okay? It's less than 10% of my account now. Second of all, we have a lot of short in our margin leverage, okay? So we already knew that we should keep ULTY at 10%. And we already knew to stay anchored in Cornerstone because Cornerstone is 30% maintenance. Okay, it is the index. It also held up very well recently during this downturn. Look at this this uptrend. It's been going sideways for a while, doing this digestion pattern, this consolidation pattern, and then we had a nice breakout. And then the market kind of pulled back right here. So we're seeing a pullback to the 50 here. But Cornerstone, it has 30% maintenance if you don't know already. And it's the index. So you can afford to put your money in Cornerstone and anchor your portfolio to the index, okay, with 30% maintenance. All right. And Cornerstone gives you that drip at NAV. Now the discount, the premium that we have for Cornerstone is 22%. So we're getting 22% every month on top of the 20% dividend roughly. It's 21% dividend per year, and you can get premiums as high as 40+%. Okay, some months we're getting 40% plus once again. And so you get the 20% dividend, you get the premiums per month, all right? And so that's what's so special about Cornerstone, and it moves up with the indexes. So you get days gains as well. You get the days gains, you get the dividends, and you get that drip at NAV, which no one else does for those instant 22% gains every month. Cornerstone's a 4-star fund, so no one can say anything bad about Cornerstone. Look, it moves upward left or right on its chart. So you have to factor back in dividends, just like you do with Yieldmax. Except Cornerstone also has rights offering opportunities, which is how we really leveled up. Everyone's asking, how did I get to $2 million in my account? Well, I've used loans, about $600,000 worth of loans over the years since I started my YouTube channel. But I mean, we're up 30% this year. Last year, we were up in the high 30s, low 40s. And the year before that, we were up 50% at one point. I think we finished up in the high 30s again, or low 40s. So, you do that you do that for 3 years. That's 100% return right there. But then on top of that, I'm using my rights offerings for Cornerstone to really level up, okay? You use the rights offerings, it tells you when to buy and sell, and that's how you really get ahead with Cornerstone. And how I did this in my account, it was all because Cornerstone is low maintenance, so I could use my margin to really go heavy into Cornerstone. And then when it had its move up, it moved up 100%, 7 to 14, in 1 year. And, and we also get that alert at Discord. I'm trying to find the Discord chat room right here. I don't have it pulled up, but the Discord chat room is, over 3,000 members strong. And we have the RO announcement there at Discord. Okay. So, I should have had this pulled up already, but anyway, Discord is the number one Discord, in my opinion. Our Discord is the number one financial Discord in the world, okay? Because we obviously talk about everything under the sun, okay? At Discord, we have, channels about Yieldmax, crypto, retirement, how to use loans to get ahead, okay? We have everything here, but we also have that rights offering announcement for Cornerstone. So that's how I really leveled up, okay? If you want to know how I leveled up, it's by playing Cornerstone properly around the rights offerings, which is in my Volume 4 e-guide if you need help playing Cornerstone. So we already knew to have 10% of our account or so in ULTY. All right, I've also hedged ULTY with Salty, which Salty isn't going to help in the event of a reverse split. But when ULTY is seeing some volatility, like it saw, over the past week, well, we've hedged with Salty. Salty was actually up the same amount that ULTY was down, if not more, on Friday. What did Salty finish at? ULTY was down 1.9. Salty was up 2.18. So this is how we hedged out our losses on Friday. This is how we're staying, ahead of the indexes. We're up 30% for the year. Okay, so we already knew to keep, 10% or so in ULTY. We already knew we could hedge it, but that wouldn't affect reverse splits. And we already knew to anchor our portfolios with Cornerstone because Cornerstone's 30% maintenance, and it's the entire index. ULTY is not the entire Yieldmax by, any means. Okay, ULTY is. It is diversified. It has a lot of different plays in it, but it's not completely diversified, and it has some questionable names in it. All right, so ULTY is a great fund. It's up around 30% for the year. You see the distribution there is 87%, and you can see here its inception since, its return since inception is 16%. And we saw in past videos, it was up about 30% for the year. So ULTY is a great fund. That's why we have so much in it. It's my second largest holding. Cornerstone is my largest holding. But why, can I put more into ULTY? It's quite risky. It's quite volatile. The indexes we're down on Friday, or we're up on Friday. Does it show here? It shows 0.52, for example, the NASDAQ, 0.53, the S&P. ULTY was down over 1%. So you want to go with the indexes, okay? Especially when you're using margin. And my margin gets paid back so fast by my dividends. I don't care about my margin. I care about what's in my portfolio. And what's in my portfolio is largely indexed or hedged. ULTY is hedged with salty. But what I also care about is a maintenance change. Okay, that's the whole thing that keeps me up at night. And so in order to never worry about a maintenance change, which would bring my available withdrawal down by around $100,000, we'd still be at 360 for withdrawal. We'd still be fine. But how's everyone else going to be faring with a maintenance change? Now, again, check your broker to see, what threshold it is for you, to get that 100% maintenance. Should it fall below that dollar amount? Again, we need a reverse split because then it'll bring the prices up. And that's what happened with me in AMZA during the Corona crash. My account went down to, my account went down to 15,000 during Corona. And then a lot of it was AMZA and it went below 2. So my maintenance went up to 100% and I got into a margin call. I had to sell a bunch of AMZA, wait for the reverse split, and then I got back into AMZA. AMZA had a huge run off the lows, and that's how I made a lot of my money back. Then I went into the triple C's, okay? So triple C's, triples, the leverages, leverage funds, and the C's, the index funds, that I just described to you. All right, and we already knew to stay with these put options, okay? We have put options. We even sell puts on ULTY to lower our margin by another 5,000. So we've lowered our margin debt by 50,000 to 100,000. So my margin debt would be at 700,000 or 800,000, but we've sold these puts, and they're lower volatility puts, and they lower our maintenance. Go check out QQQY, for example, when we sold that put. It took our maintenance down to 15%, okay? So selling puts is the safe way to kind of stay on the sidelines during this market volatility. We fall less in the market with our sold puts. We lower our margin. We lower our cost basis. We lower our risk. We get assigned with dividends at the lows, which is what we want. Okay. And again, we have lower volatility, and that's how I'm outperforming the market during this downturn. Okay. If you need help selling options, that's in volume 6. And again, if you need help understanding maintenance, that's in volume 3, if you're just now joining this show. All right. So we already knew, okay, I'm telling you everything that we already knew to do. All right. And that's why it doesn't matter if we have a reverse split or not with ULTY. Okay. We're going to be fine, but how are y'all going to be? And I know a lot of y'all are pushing the limits. Okay, and I know you are over leveraged in certain things. Even if you're not using margin, you're over concentrated in certain things. So how would you deal with a maintenance change should that occur? All right, so we need those reverse splits. I don't know why everyone's so against reverse splits on YouTube. Yieldmax knows that reverse splits mean nothing because we're talking about not a stock, okay? We're talking about a fund, okay? The wrapper of the fund. So if reverse splits don't change anything, they're purely cosmetic. Go look it up, okay? Not for a stock, for a dividend paying fund. Okay, nothing changes except our maintenance will fall, which gives our available withdrawal a boost, which then allows us to live the FIRE lifestyle, which means financially independent, retire early. Okay, we're going to talk about ULTY replacements on our team session, okay, coming up. All right, so we have a team session on Sunday. When you buy my e-guides, you get Discord and my phone number free for life. Okay, so with a gold bundle or platinum bundle purchase, you get my phone number, okay, my personal phone number. You can call me anytime, okay? I'm here for all my members, and you get Discord free for life, okay, with those e-guides. All right, and so we're going to do a team session. You can find out how to access teams, in Discord. That's for Discord members only. And we'll talk about those ULTY alternatives, some new funds that are coming out that we could replace ULTY with, okay, that wouldn't give us that maintenance issue. But I'm never going to sell ULTY because I love ULTY and I love Yieldmax, and Yieldmax has really helped us get ahead. I hope Yieldmax is listening to this. All right. I'm going to keep ULTY, but I can't keep adding to it if the maintenance goes up to 100%, obviously. So one day we're going to have diversification away from ULTY. And so, we're going to talk about that tonight on Sunday in that team session, as well as how to delever the next part of my portfolio, which I forgot to mention. Again, a lot of this is not long leverage. This is short leverage. We have about 400,000 short. Okay. And so that's how I got my income up as well, to such high amounts. All right. My income is, over, 1 million. We have a repeat in some of the dividends. So because of the weekly pay structure. So my dividends are really more like 1.2, 1.3 million. So that's about 100,000 a month. This is going to, help pay down our margin so fast because a lot of that margin is short and that has income. Okay. Like Salty and ULTY. Salty has a great dividend. So, you know, we're actually growing no matter what the market does because our margin is going to get paid down so fast. Okay. So that'll do it for this video. If you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com or head to my website, unconventionalwealthideas.com, where we're leading the FIRE movement. You can see all my testimonials here. I have about 35 more to enter in. I could enter in so many more, but you know, it would be well over 100 testimonials here. And I can't even, again, enter in the rest. My members are so supportive of me. I think they know, you know, I think they're supportive because I give them my heart and soul. They can call me anytime. And you know, we're outperforming the market in the process. Okay, so take care, everyone. Bye-bye.